Hey, welcome back to my video. In today's video, we're going to see how we can double or even triple your profits in your trades while just using resting bars. Okay, so let's look at nvidia. No, let's start with Neo stock. Okay, and right here it's in a downtrend. And you've got the two indicators. We've got the 200 moving average indicator. We've got the 20-day average indicator. And the stock is right beneath both of them. So that tells us the stock is in a downtrend. We're in the 15-minute time frame. And what I like to look at is what are called resting bars, and those are small little bars that appear in a range motion. They just range. They're not very large bars, and what they do is they usually appear in between larger moves. So over here, let me just get the brush. Okay, so you've got a down movement. Okay, you're in a downtrend. You've got a down movement. Now you've got tiny little bars. Now it doesn't matter which way the bars are going. They can be going up. It can be going sideways. Whatever. It doesn't matter. They are resting bars. They are what usually appear before the stock continues to move in the same direction. So here you go. Okay, you got a few of them, and then the stock comes down, and you have large red bars again. Okay, again, look at all these resting bars. Okay, they're small bars. Now you see large red bars beginning to form, so the stock continues to go down. Okay, so my point here is that when your stock, okay, let's say you enter your trade here for a put. Your stock moves down. Okay, all right, you've got a profit, but you don't have to feel that you have to immediately exit your trade. If you see small resting bars forming, okay, just give it a chance and see what happens. If you see larger bars forming, all right, sorry about that. I was rudely interrupted there. Okay, so again, you don't have to feel that you have to get out of your trade once you've made that profit. You can wait until the resting bars finish appearing, finish developing. Then you're going to see long, most likely you will see long red bars again. Okay, then you can get out here, or again, wait until more resting bars continue and follow, and then maybe you can get out of your trade over here. Okay, so either way, if you do this, if you follow this pattern, you'll know you will make much more in profits than if you would have just gotten out when you first thought, okay, I've got a profit here, let me just get out and then start again. No, you can, or another thing you can do is you can take half your profits here. Okay, so at least you get to keep something, take something off the table. Wait until your resting bars finish forming. Okay, with the what you're allowed to remain in the trade. You can also add to the trade. That's another thing you can do. You can add more to your trade, and you can add more shares. Okay, and as you do so, your profits will double and triple. Okay, So let's go to Neo stock. Well, no, we just did Neo. Let's go to nvidia. All right, nvidia also in a downtrend. Again, you've got the long red bars. Okay, the stock just went down. You can either choose to get out here or see how this plays out. You can let the smaller bars form. Okay, then until you see the large red ones develop. Okay, now look at the difference between having gotten out of your trade here and here. Okay, that's a very big difference. Again, you can wait until your resting bars form. Okay, finish forming, and then again here you go, large red bars continue going down, and again just continue the same pattern. And before you know it, you've made much more than you would have made had you had gotten out of your trade immediately. Let's see. Let's look at another part of this. Okay, let's remove these. See if I can move this chart. Okay. Again, here we go. See the difference? You've got large red bars. You've got some green, and then you've got small ranging bars. Okay, large red bars, smaller bars. Okay, you got a pullback. Then you go down. Smaller bars, you go down. All right. And it's also the same thing. The same thing goes for the if you're going in an uptrend. So here we are. You've got long green bars. You've got large green bars forming. Okay, here we go. Then you start seeing smaller bars, and then they continue up. All right. Okay, let's see if we can look at a different chart. Let's look at Nokia. Okay, let's see. Oh, guys, I don't know if you've been able to hear me. My mic was down. Let me just check the mic for a minute. Hold on. Okay, I had the mic down, but I happened to check the audio. You can hear it. It's a little muffled. I'll see if I can re-record, but at least I can, I was able to hear something. And it happens to me. I put the mic down. I get distracted. I put it down. Forget to pick it back up. All right. So we've got Nokia here. And again, it's in a downtrend. You've got the larger red candles. Okay, the larger red candles, ranging candles. We've got a large gap going down, larger red candles. Whenever you see a gap in between two candles, or the day opens in a gap, if you just connect them, okay, just look at it as a large red candle. Okay, just connect them. Okay, so the trend continues down. Smaller ranging candles. Again, you've got a huge gap down. So we're going to fill that in. We're going to say that's a large red candle. Ranging candles. Okay, again, and you continue down. All right, guys, we're going to finish here. Thank you for coming to my channel. Please comment, share, and subscribe. And if any of you haven't subscribed, please consider subscribing. We'll see you next time. Bye-bye.